Let's talk about Vancouver real estate market in June 2024. The newest statistics are out. First, let's talk about the volume of sales. There were a total of 2,733 sales recorded in May 2024, which is about 20% below what we saw in May 2023. It is also almost 20% below the 10-year seasonal average, which is a bit worrisome because if you remember statistics from last month, we saw a huge number of new listings hitting the market. However, the good news was that those numbers were somewhat offset with the bigger number of total sales. The sales were about 3.4% over what we saw the previous year. So even though it didn't really absorb all the listings fully, the market sort of rebounded a little bit. For this month, May 2024, we saw again a pretty big influx of new listings. However, the market didn't seem to absorb all of these new listings. In fact, we saw a total of 6,374 new listings. That includes all types of properties. That's about a 12.6% increase comparing to what we saw last year in May 2023. It is also about 7% over the 10-year seasonal average. And just for fun, let's take a look at the graph of new listings in Greater Vancouver over the last 10 years. As you can see, May 2024, we saw a pretty big spike comparing to the previous years. So here is May 2022. That was the last year we saw such a large number of new listings. There was also May 2021, which was even higher number of new listings than what we saw this year. But looking back a little bit farther, and we can see that that number was way lower back in the past. First of all, that could be explained with a larger number of new inventory being available. As you can imagine, over the last 10 years, we were building more high rises, more housing, so there's just more volume in terms of new listings to be available. But secondly, of course, that has to do with sellers are sort of more in a mood to sell, which we'll talk about in a minute here or so. I think looking back historically, May is sort of a busier month for real estate. It's busier month for new listings. So the number of new listings is worrisome because it is quite a large number, especially since we had a pretty active April with the new listings. However, it is not out of the seasonal normality. What's more worrisome is, of course, the total number of sales, because those numbers are down. And once again, if you look at the graph, the numbers of sales are not proportionally representing the total number of new listings. If we compare to May 2023, you can see that there were quite a few more sales comparing to now, but it's also because May 2023, for whatever reason, was actually a pretty active month for real estate. If you look back, the Fed actually held the rate during that period, and buyers had a bit of confidence to go out and start looking at real estate. There were a couple of months last year, May, some parts of June, that the market weirdly was very active. But overall, looking back, you can see that sort of the sales are not as strong as what we've seen in the past years and in the past May, April period of time. Coming back to the real estate board statistics, the total number of inventory, of course, has increased because we saw more new listings coming to the market, but the sales weren't really that strong. So no surprise here, the total number of units available between all property types is about 13,600, which is a 46.3% increase comparing to May 2023. So that's a huge increase. It is also about a 20% increase over the 10-year seasonal average. So we can see a bit of a pattern forming here. There is more inventory being available, but not as many sales. And that leads a lot of people to believe that we're gonna see a huge real estate crash. However, what has happened is that the federal government just yesterday has reduced interest rates. They only reduced it by 0.25% or about a 25 percentage points, which is not gonna make a huge difference in terms of people's borrowing power. It is also not gonna make a big difference for people's mortgage amounts. Just to give you an idea, this percentage cut will represent about $16 less for a mortgage payment on every $100,000. In other words, if you borrow $500,000, you're looking at about $80 less of a payment per month because of this new interest rate cut. And to be fair, these sort of rates were available before from fixed mortgages. That seems to be the trend with a lot of new borrowers. They're going with fixed mortgages over variable rate. So this cut is not going to really affect people's borrowing power per se. But what it will affect is buyers' confidence in the market. And I think the sentiment is going to change over the next few months. People are going to start seeing more interest rate cuts. A lot of experts are predicting about a 1% rate reduction by the end of this year, which is going to make a pretty big difference. So I think we are going to see more buyers coming to the market. Now, it's not going to be a huge influx of buyers. It's not going to, at least in my opinion, represent this huge surge in the market, which in my opinion, again, is actually a good thing. I don't like seeing these crazy markets because in that case, everyone walks around unhappy. The sellers are unhappy because they thought they could get more money if they listed a little bit later. The buyers are unhappy because they always feel like they overpaid. It's just too crazy. So having a more balanced market is actually a good thing. And I think with the balance that is going to be created with this sort of more inventory and less sales, balanced out with lesser interest rates and maybe more buyer confidence, that is sort of going to level out. So we're not going to see a huge surge of buyers coming to the market and sort of buying up the properties if the market wasn't as slow as it is right now. But we're also not going to see a dramatic slowdown that would happen if the Fed didn't lower the interest rates or maybe even increase the interest rates, which would be very unlikely. So having this sort of balance been struck right now is probably a good thing, but time will tell. Another one of my favorite statistics to look at is the sales to active listings ratio. That tells us out of 100 properties, how many properties have sold. And here the statistics are not too bad, in fact. So by the property type, detached homes are about 16.8%. So the detached homes have actually gained strength over the last few months. Then we have the attached properties are 25.1%. So yeah, very active, very strong still. And apartments, 22.5%. So this number is lower than what we've seen in the past, but generally speaking, it is still quite a strong market. Lastly, let's take a look at the home price index. So the prices are increasing, not dramatically, but we see a slight price increase across all property types. So for the detached housing market, the prices are up about 6% comparing to May 2023 and about 1.3% comparing to April 2024. For attached market, that number is 2.2% increase comparing to May 2023 and about 0.3% decrease comparing to April 2024. And we also have the attached market, which represents about a 5.2% increase comparing to May 2023 and about a 1% increase comparing to April 2024. So across the board, you can see that the real estate prices are going up. Again, we have seen a bit of a slowdown with apartments, especially this month. And that's what I wanted to talk about lastly in this video and what I think is happening, at least based on my experience. A proportionally higher number of rental units are being listed for sale than usual. And that could be explained with the fact that a lot of landlords are going to be renewing their mortgages over the next few months, or maybe they just renewed their mortgages and now they're hit with a much higher payment. But of course, they can't just raise the rents on tenants. There is a cap on how much you can increase rental rates every year. And unless the tenant moves out, you can't really raise rent more than that allowed cap. So now a lot of landlords are seeing themselves either underwater or breaking even, which is of course not great. And they also see this trend continuing for a while because even though the interest rates are going to come down, they're going to come down very slowly. So now the rents that they're receiving are probably not covering their mortgages, or maybe they are covering mortgages, but they're not bringing in any profits. At this point, a lot of landlords would rather sell than have a cash flow negative property. And that's why we see a lot of new apartments being listed for sale. That's also why we see the sales to active listings ratio for apartments specifically going down a little bit because there's just more than the usual amount of inventory available on the market for the apartments. That is actually pretty good news for a lot of first-time homebuyers, especially because from my experience, a lot of first-time homebuyers are looking for these sort of starter homes, and these are usually also very popular with investors. Bachelor units, one-bedroom units, these are usually the units that investors buy to rent out, which means that you have, as a first-time home buyer, more options, more choices, and more negotiating power. And use that wisely. If you are able to qualify for mortgage, and if you believe that this is the right time for you to buy, you probably will have one of the better negotiating positions that we've seen in a very long time. I actually made a specific video on the subject talking about how this is probably one of the best deals on the market right now because a lot of these sellers, they're just really needing to sell. They don't want to be cash flow negative. Every month is costing them more and more money. So they will be willing to sort of take some steps forward and come to your price or come close to your price, and you as a buyer have a lot more power. And that's it for this market update. Hit me up if you're looking to buy or sell any real estate in Metro Vancouver. I'd be happy to help. There's also a first-time homebuyer's guide linked in the description below. Check it out. It's absolutely free. You don't even need to sign up for anything. It's just a tool that you could use if you need to. Thanks for watching this video all the way until the end. Give it a like, subscribe to the YouTube channel, and we'll see you next time.